In company results, African Rainbow Minerals reported a 58% decrease in full-year headline earnings per basic earnings. That's 97% lower. But joining us to help make sense of these numbers is the African Rainbow Minerals Chief Executive, Mike Schmidt. Mike, it's always a pleasure having you in studio. You already spoke in your outlook in their last set of results that mining is for the long term. And you know that commodity prices are under pressure. Since then, things have not looked any better. How are you gearing up to ensure that you will still be sustainable in this environment?
Thank you. Dumi, just in the context of this very challenging global market environment, I'm very pleased with the way ARM and its operations have responded in a very proactive way. You would have noticed from the results that there's a number of initiatives in terms of cost driving, efficiencies, and cash preservation. And resulting out of that is still we have a very, very strong, robust balance sheet. And out of that, we've been able to declare what's the 9th consecutive dividend of 350 this morning. So I'm very pleased with the outcome.
Yeah, definitely. I think a dividend just goes to show how strong your guys' balance sheet still is. But, I mean, obviously, like you said, an incredibly tough environment. I mean, I can see you're obviously shutting down a number of furnaces as well, you know, the manganese furnace, etc., putting them on care and maintenance. I mean, in that process, I mean, obviously, this is around the electricity concerns and the electricity supply issues. I mean, how difficult is it to bring those back online later on? Or what is the plan with those assets?
Gary, I mean, your point is well taken. It's not only the electricity supply in South Africa, it's really the global market in terms of the price fundamentals that have also driven this. So we have taken a reasonably big impairment on that, but it's reasonably quickly to start those up in the right time and the right circumstances. But it's the right thing to do now in an economic environment as which we're faced with. Tough decision, but the right decision.
Mike, some of the news headlines today have been around Sibanye confirming that they are making a play for Amplats. Firstly, is this something that you might consider in terms of African Rainbow Minerals seeking more platinum assets? And what's happening with Harmony Gold? The big investment that you've made there, is it coming to fruition?
To me, the first thing, if we look at platinum, we've always expressed that we would like to have greater critical mass in terms of PGMs, but we're very specific about what we're looking for. And we want to make sure that our assets are long life, low unit cost, positioned below the 50th percentile on the global cost curve. And certainly we do not want to take a disproportionate stake in labor intensive. So the more the mechanized field where you can more sweat the assets and sweat the equipment. And we've seen that's a big success model to us. So.
And Harmony Gold?
In terms of Harmony, Harmony is an investment on our balance sheet. It is strategic, and we're pretty comfortable with what we see going on in Wafi-Golpu, and we think that there's value add down the line on that operation. So we quite keen on holding on to what we've got there.
And I mean, a theme that's sort of coming across from all the, you know, the large diversified miners is, I mean, especially in iron ore, is to really just keep on ramping up production, especially from Rio and Billiton, to try and, you know, almost grab market share and, you know, basically put the high-cost Chinese producers out of business. And it seems to be a theme across all resource companies at the moment that you know, you just keep on spending you know, capex and you know, investing in, you know, further production. You know, and this is obviously driving prices lower. How is African Rainbow Minerals reacting to that? I saw that you have pulled back on your capex spend slightly, but how are you reacting to that price environment? I know you guys are a very low-cost producer as well, though.
Yeah. Gary, our iron ore division is running at nameplate capacity at the 16 million and 14 million on the export. We need to preserve that and optimize on that. So we've been consciously driving ourselves down the cost curve. There's been a number of initiatives on that, and I'm pleased today, if you look compared to last year, that our cost position is substantially lower, and so we can take it on the nose. Importantly, our operations are very high and good quality. Being 65, majority of it, we have more than a 55 to 45 ratio on the lumpy to irons, and we demand a premium on that. And so we're pretty robust in those operations.
Have you, I mean, the buyers of your, especially iron ore, I mean, have you noticed a big tick up because of low oil prices? Because, I mean, are you transporting, I'm assuming, to China as well? What I'm saying is, has the low oil price really, assisted in your business?
It's most definitely benefited in terms of the logistics, and that has come down, and that's helped the bottom line quite a lot. I want to just add that in the 75 years that this company's been doing business as Assmang, we've never yet had one ship turnaround. So the premium and quality is a big differentiator, and the same for our manganese. Quality is a big differentiator for us.
Mike, thank you so much for coming in. Looking forward to having you back at the desk in your next set of results.
Thank you very much.
That was the African Rainbow Minerals Chief Executive, Mike Schmidt.